With active inventory in Toronto up over 70%, does that mean the housing shortage was a myth perpetrated by evil realtors and scumbag investors? Hey, it's a special myth-busting episode here on Bald Prairie Real Estate. It's the weekly news recap. My name is 𝗤𝗄𝗧, real estate agent in Regina, Saskatchewan. That's my trusted assistant, 𝗤𝗲𝗍𝗂. This is where we go through what I think are the most interesting Canadian real estate related news topics, give you my thoughts and opinions on them. But of course, we can't start a Bald Prairie Real Estate video off without a terrible bad dad joke. What you get from a pampered cow? Spoiled milk. If you have a terrible joke I can use in a future episode, put it in the comments below. Let's get into this week's Canadian real estate news. I want to do a quick update before we get into things on a topic I covered last week. You can now go, instead of a 25-year amortization, you can extend it out to a 30-year amortization. That is, the 30-year amortizations now being offered for first-time homebuyers on new construction homes. This is all done through CMHC. So now your CMHC fees are going to be higher if you go with this 30-year amortization. It goes up 20 basis points, meaning if you put down 5%, your CMHC fee used to be 4%. Now it's going to be at 4.2%. Of course, the more you put down, the lower the CMHC fees are, but they'll always be 20 basis points higher if you go with this 30-year amortization, meaning that not only do you pay more in interest to the banks, you're also paying more to the government in fees. Real quick pause here. If you're thinking about buying a house in Regina, obviously I'd love to help you out, but if you're somewhere else in Canada, don't worry, I can get you set up with a perfect real estate agent that'll handpick for you. If you check out the description of this video, you're gonna see a link to my calendar where you can book me in for an agent recommendation consultation. I'll give you a call, learn about what's important to you in a house, in a real estate agent, and I'll get you set up with that perfect agent in your market. And now let's get back to the video. Let's dive into the Realtors.ca August rent report and see what's going on in the price of rent in Canada. An interesting change, or maybe rather not so much a change, is that Vancouver and Toronto both saw small month-over-month increases.
Editor here. I believe Mr. Bald Prairie meant to say that Toronto had a slight decrease. Not much going on in that shiny head of his. Anyways, back to the video.
But year over year, they continue to see prices decline 8% and 6% respectively, and has been the case pretty much for the last year. The most affordable cities in Canada, the Prairies predominantly, Regina, Saskatoon, Edmonton, are all seeing some of the largest year-over-year rent increases, between 15 and 20% in those cities. And we've seen a continued trend, people moving away from Vancouver and Toronto to the Prairies in search of more affordable living, whether it be renting or it's buying. But then out of the blue, Waterloo said, hey, hold my beer. And we saw rent increase for one-bedroom apartments 22% year over year. What the heck is going on in Waterloo?
Hey,
hold up one second.
We're gonna be late for swimming. We gotta go.
Yep, I gotta get to my daughter's swimming lessons. Hold up, I'll be back. And we're back here. This segment has been a hit with you guys, so let's get you up to speed on one of the best mortgage rates available in Canada. And right now, this week, Citadel has got, well, a clean sweep. They've got the most affordable options pretty much across the board here. Remember though that Citadel is not national, so in some provinces they're not available. And in that case, I've got some other options for you. Starting off with the insured mortgages, 5-year fixed 4.43 through Citadel. But if that's not an option for you, 4.44 through MCAP. When it comes to 10-year fixed, Citadel once again takes the cake, 5.6%. Maybe a month or so ago, that was what the 5-year rate was. That's actually pretty decent for a 10-year rate. And when it comes to variables, Citadel's got it once again, 5.4%. But if you want to go with a static or fixed payment variable, Manulife has it at 5.55. When it comes to insured mortgages, a 5-year fixed, you've got Citadel once again leading the pack, 4.94. If that's not available to you, MCAP has an option at 5.09. When it comes to 10-year, same as the uninsured rate at 5.6 through Citadel. When it comes to 5-year variable rate, Citadel has it at 4.99, making it a clean sweep, taking the cake there. And MCAP has an option at 6.2%. When it comes to the big 5 banks and their best 5-year fixed rates on insured mortgages, CIBC is 4.64%. Bank of Montreal is 4.84%, TD 4.99, Royal Bank 5.04, and Scotiabank hasn't changed at all, at least now the time we're recording this video, 6.79%, meaning they're almost 2% higher than the lowest Big 5 bank. And if you found a better rate than anything I've got here, Put in the comments below and which bank it was through. I'm very curious to see if there's better rates you guys have found available. Next, let's talk about the Bank of Canada's most recent rate adjustment. In their meeting minutes, they talk about the impact of home prices on their decisions. I think it's awesome that the Bank of Canada now releases their meeting minutes so that while you may not agree with the rate decision they make at the time, at least you get to peek behind the curtain and see why they made that decision. The Bank of Canada's mandate is to keep inflation between 1% and 3%. They're not supposed to focus on what's happening with home prices, but of course, if you read through these meeting minutes, you can see that this has been a consideration in their decision-making over the last couple of meetings. If inflation continues to trend down, you can expect the Bank of Canada will continue to drop rates. That's what they've talked about in these meeting minutes. There is, though, some fear. What if inflation drops well below 2%, closing in on that 1% range? Well, that could actually mean that they've cut too late. And at least in my opinion, they were late to the game raising interest rates, and it probably is going to be true as well. They're going to be late to the game dropping interest rates fast enough.
I apologize. It was a chocolate bar, but I apologize.
There was also a clear worry from the Bank of Canada that if they were cutting rates, that would cause the housing market and home prices to take off. And at least at this point, it seems they've put that fear aside for now. When it comes to housing, the Governing Council has a really interesting comment. I'm going to read it directly because it does a great job of parlaying us into what I want to talk about next here in this video. They're saying that the imbalance between demand and supply was likely to persist for some time. Cue foreshadowing. Finally, let's talk about this shortage of homes in Ontario with a great article from the Toronto Star. I've talked many times before about the housing shortage in Canada, and this article I think does a very good job of putting some numbers to it so it makes the picture more clear. Now they're talking specifically in this one about Ontario numbers, and they're pulling data from CMHC. CMHC talks about housing starts. Unfortunately, not all housing starts become completions, and CMHC stopped collecting data on housing completions back in 2022. So while 100,000 houses may have started construction, it doesn't actually mean they turned into houses that people can move into. Ontario's population has grown by 1.2 million in the last 36 months. That's a decade's worth of growth in 2.5 years. Just the last 6 months alone, we've seen Ontario's population grow by more than 200,000. And in that same time frame, they've only started, again, not completed, started 37,000 new homes. 2/3 of those homes were apartments, mostly studio and one-bedroom apartments, of course, not fit for a family. If you want to put the numbers into more context, at the rate the population is growing, Ontario is building one bedroom for every 3 to 4 people. Not houses, one bedroom for every 3 to 4 houses. The Ontario plan is to build 125,000 houses this year, and let me check the date. Yeah, we're more than 6 months into the year, and the 37,000 starts, again, not completions, would be 30% of their goal. There is zero chance that the Ontario government is going to hit these housing starts goals, and that's true across Canada right now. So for those saying that the housing shortage was a myth, I say this myth is busted. That's a week's worth of Canadian news all in one video. If you love this video, please give this video a like. Hit me up in the comments section. I love chatting with you guys there. And you should watch this video next here on Prairie Real Estate. As always, thanks very much for watching.